Welcome to the Scent Shifter channel, changing the power of your money. People think of money as a static asset. However, in today's economy, liquid assets such as cash and stocks have a significant impact. Many of us are unaware of the term liquid asset to a certain extent. Many think it's a convenient way for financial transactions and often regard cash as the only liquid asset that can make your financial operations smooth. For a comprehensive understanding, we've gathered information about what liquid asset is, followed by the types of liquid assets and reasons how they can be beneficial. Well, there is way too much to know about how each type functions, but before moving forward, do like our video and follow our page Scent Shifter for further updates on how these cash operations work. Moving forward, the first thing that comes to your mind is, what are liquid assets? Liquid assets are money that's readily convertible into cash. This means that the money can be used to purchase goods and services right away rather than wait for a loan or investment to be repaid. Common liquid assets include stocks, bonds, and cash. Liquidity ratios are a way to measure the financial leverage of a business, and the ratio for liquid assets is comparatively low. As a result, they grant you financial insight into how much money a business can afford to repay individually and how long it'll take to pay off debts. Moving ahead, you might ask multiple questions about how liquid assets work. How are liquid assets beneficial? Liquid assets are beneficial for a few reasons. They allow you to access money quickly and easily. This is highly influential if you need money to cover an unexpected expense or if you need to quickly pay down your debt. Liquid assets typically have low volatility, making them stable investments over time. Liquid assets can be converted into other forms of investment, such as stocks or bonds, which can provide greater returns over time. Liquid assets are an important part of everyone's financial plan. Whether you're saving for a rainy day, paying off debt, or investing your money for the future, liquid assets can help make it happen. Examples of liquid assets. People often think of liquid assets as the money they can easily exchange for goods and services. However, there are a variety of liquid assets that can be turned into cash conveniently, including stocks, bonds, and real estate. Here are 5 examples. Cash. Cash can be considered the primary source of liquid assets. It's non-volatile and holds a maximum liquidity ratio with minimal risks involved. Bonds. Bonds are debt securities that governments or corporations issue to investors. If the issuer of a bond defaults on its payments, bondholders may be able to sell their bonds for a lower price and still make a profit. Real estate. Real estate is an investment that can serve as a place to live, an asset for personal use, or a business. The maximum generation of liquid cash flow is earned through renting out properties. Commodities. Commodities are raw materials that help produce goods such as oil and gold. They may be traded on commodities exchanges or in the futures markets. Stocks. Stocks are a type of ownership interest in an organization or enterprise. They may be traded on stock exchanges and are typically shares of ownership in a company. Precious metals. Precious metals are not just an investment for the future. They can also be seen as liquid assets. That's because they're easy to trade and store. They tend to be more volatile than other investments, but this can also appeal to some investors. What are non-liquid assets? Investors and policymakers are looking forward to increasing the importance of non-liquid assets in an economy. Non-liquid assets can include farmland, natural resources, and residential homes. These assets may have value even with little or no economic activity. They can be valuable in periods of economic downturn because they provide a source of stability and longevity to an economy. This is especially true of natural resources and farmland, which can be valued for their long-term potential to produce crops or provide drinking water. On the other hand, housing can be a good investment for someone who wants to build equity, although it's not as stable as other assets. Many types of assets don't have a liquid form, such as the goodwill of your business or tangible property. Some people refer to these assets as non-liquid assets. Non-liquid assets can be difficult to value and share, making them risky for investors. However, non-liquid assets can also be valuable sources of income. If you find this video useful, do hit that like button on our channel, Sense Shifter, subscribe to it for further updates, and don't forget to hit that bell icon to be notified of our next releases. Bye now!